Hey traders, welcome to our weekly notes live show for Sunday. Taking a look at the open here and what kind of price action we're dealing with as the market's taking a quick look at, what is this mood on the Sunday open going into the Asian session. And then also let's take a look at the week because this is where things get pretty darn interesting. If you haven't yet already checked out the economic calendar, there's really one big story coming up. Let's move this calendar into the viewable area here. All right, so this is Forex Factory. Let's zoom in a bit. We're going to click on the calendar tab and we're just going to scroll down. We have some interesting monetary policy meeting minutes coming out of Australia, but not really high impact. New Zealand CPI, again, not really high impact. If you're wondering, is today's Asian session going to be solid for the first of our day trading windows? Be very cautious because we have a bank holiday in Japan that will, of course, affect the kind of liquidity, the kind of participation that we have. So things are pretty quiet. Again, you got some BOE, RBA, governor speaking. BOE may be a little bit interesting. Building permits, housing starts, but it's when we get into, I keep scrolling down here, we start getting into some BOJ outlook. What we're going to start to see is we're getting the Bank of England, we're getting the Bank of Japan, and then whammo, here comes the ECB. And this is going to be where most of the volatility is waiting this week. Existing home sales, things of that nature could be interesting, but that ECB meeting is going to affect bonds. It's going to affect the U.S. dollar for sure. And after the U.S. central bank, the European central bank is going to be one that will affect a lot of even the U.S. market. So Thursday, we have a very high heat, hot zone, and we go into flash services PMI. Now, I'm going to go to the week after and just remind everybody as we go into next week, July 27, now we're going into the Fed Fund futures. And we're still looking at really most of the expectation sitting at a 3/4 of a point hike for that next Wednesday. Not this Wednesday. Remember, this Thursday, we have European Central Bank. Next Wednesday, we're going to have the U.S. Central Bank. So when you think about Bank of England and Bank of Japan, followed up by ECB, we've got 2 weeks of a lot of major central banks, all of which, the one affecting the pound sterling, the one affecting the Japanese yen and the euro, all of which will affect what's going on with the US dollar basket. So I'd say the dollar, bonds, euro dollar, euro FX, these are all very much in play these next 2 weeks, right? These next 2 weeks. All right, so that's what's going on with the economic calendar. That's what I've got my eye on for the most part. And let's jump into some questions, shall we? Now, when we think about the kind of impact that those central banks can have on the U.S., remember, when it comes to those particular central banks, most especially the European Central Bank, we're talking about high impact in terms of what monetary policy other central banks are deploying now. They're all doing the same thing for the most part. Bank of England hiking, ECB hiking, U.S. Central Bank, FOMC, again, hiking. So we have a tightening policy that's really global amongst the G7, G8. The exception being the Bank of Japan, usually not a central bank that may ever again embrace any kind of hawkishness, any kind of rate hikes of at least a tightening cycle. Very different in that regard. So Bank of Japan is just sort of one I don't pay a lot of attention to because we know what their central bank policy is. Buy JGBs, keep rates low. But ECB, Bank of England, especially ECB, is going to be one to watch. All right, so let's jump into the first question, and it is Netflix. Sure. So when we take a look at Netflix, gang, remember that anytime you're looking at an individual stock. You're looking at a piece of either an index or you're looking at a piece of a sector. You're always looking at a piece of something. There are stocks that are not heavily weighted within major sectors and major indices. They might be in more of a niche type corner of the market. Netflix is not one of those situations. Netflix, however, is very bearish. I know there's a lot of folks wondering, hey, Rag, as we go into earnings season, as we go into earnings, is there anything to do? So let me describe what my earnings process is. Let me grab my drawing tool here. And by the way, you can get a great explainer on my 642 earnings process over at countdowntrader.com, which I would highly recommend. So here's your earnings. And that's coming out here. We want to go back about 6 weeks. That's usually what I like to focus on. So it's going to put you, right around the beginning of June. So we're going back 6 weeks. And that's where I look to see, are there any trends, preferably up, but down is one of them too. Are there any trends already in place, already with traction, already confirmed by the tools that we use? So whether you're looking at market structure through the trade flags, or you're looking at market structure through the multi, both of which measure the 8, 13, 21, and 34 EMAs to get a very accurate and very, I think, in terms of timing, well-timed view of market shifts in the structure. Check those out. What we want to remember is we inherited some weakness going into the event. I don't want to play the event itself. So I'm not the person to ask when it comes to, Rog, what's your play for Netflix earnings? I'm going to be flat for earnings. It's very rare that I actually play the volatility of the event. I'll like to trade going into the event. I'll be open to trading after. We'll see where the market moves. This particular Netflix stock moves after earnings, but I will not be in that window through earnings. And I think earnings is the main point in terms of what Netflix is dealing with next. And remember, there are traders who like to put on certain kinds of trades into earnings. That will never be me. However, I do want to mention that right around the beginning of July, in about 14 days in front of earnings, something interesting happens, and you'll notice it in the implied volatility. Now, no volatility reading is static. We always have to look at volatility, how it is either expanding or contracting. Implied volatility starts to favor option sellers going into earnings. And since I am, for the most part, the majority of my options trading is going to be based on buying calls, buying puts. This is where I know, I'm gonna go ahead and kind of get off the bus here, because it's not really where I want to venture into, because it's not going to favor my style of directional debits. It's going to favor more a trader who wants to collect credit as the main catalyst for the way they're going to profit. And think about that for a moment, gang. Anytime you put on an options trade, ask yourselves, is the main vehicle for my being able to make money from that trade, being able to profit from that trade based on what I paid for the option increasing? Or is it based on what I sold the option for decreasing? Are you benefiting from the debit side or the credit side? Understand that a lot of traders don't differentiate between, this is the strategy, and then which of the legs is the money-making leg. When we go into spreads, one leg of a spread is usually either to offset risk or offset cost. And the other leg is designed to either, if it's credit, reduce. So now we've collected credit and it's worth less, we make money. Remember which legs are designed to offset costs and offset risk, and which ones are designed to actually either, how are they going to pay you? How are you getting paid? Is the debit increasing in value, or is the credit decreasing in value? Always keep that in mind. I'm always surprised how often traders, get into option spreads and aren't really sure which part of that Spread is the leg at which of which they are looking to make the money for the trade on, right? Anyway, that's pretty rudimentary, but I think a lot of traders, early beginning options traders, wander into spreads without really a clear idea of that. All right, next up, Nick asks, I'm trying to narrow my focus to 10 things to trade. So I only watch 10 charts, but I can be intimately familiar with all of them. I also want them to be fairly diverse. If you start with the major indices, yes, I would absolutely recommend starting with the major indices, because I don't believe it's easy to have the same 10 every day, right? Although you could. If you start off with the indices, then you'll have an idea of, well, directionally which way you want to be moving, but then you'll also have an understanding of which sectors are mostly in play. So I really can't tell you, because I would never have the same 10. I always start with the indices. So let me put it this way, Nick. If I'm going to day trade, and I'm presuming you're asking about day trading, because that's the only way that I would tell you to even have a sort of fixed list. My fixed list, if there is one, is S&P, NASDAQ, Dow, because I want to know if the Dow is in play. It's going to give me insight into the S&P, oil, gold, bonds, euro. Those 7 are actually going to give you just a sort of bird's eye view of the broader markets. And then if you want to add another 4, if you want to dial down and add a few more, then it makes sense to sort of keep those 4 slots open, depending on what's happening with oil, gold, euro, bonds, S&P, NASDAQ, Dow. And you'll notice I left Russell off the list. Russell is not really a major average when it comes to understanding broad-based risk appetite and risk aversion. Reason being, it's weighted differently. It's not a high concentration weighted index. It doesn't share really any stocks with the other 3 indices. It can do its own thing because of that. So I really would say maybe 6 and then leave 4 slots open. All right, Nick? I totally get where you're going, but I don't know that having all 10 ready to go, because we don't know what is going to happen from the bell to 10 a.m. during that clearing. We may know we have gaps, but you know that the morning sort of starts after the clearing. We get a truer idea of whether or not the bulls or bears are really the ones with traction. So maybe keep 6 slots ready to go, which, maybe put the VIX in there. You can trade the VIX as a futures contract with the VXX. Maybe put the VIX in there as well. And that's 7, and those, I would say you could probably start with those 7 pretty regularly. I would also maybe throw the XLK in there, but remember, these are as much barometers as they are potential trading names. So maybe throw the VIX and XLK. I'm trying to fill those 10 for you without putting 10 in there that we would not want to look at every day anyway. So I hope that helps. All right, Mark asks, I exit a TLT put. Sure. All right, exit a TLT put with a paper cut, no problem. With FOMC just a week away, about 10 days away, does it look like a good reentry? Not yet. Mark, we'd have to move up a little bit higher because it's chopped now and we need an over bought short sell. But I love where your head's at, but not yet. And I'm not sure that I want to sit through the volatility on the bonds or through the ECB or through the FOMC, knowing that we could be really right or we could be really wrong. The same thing would go for gold. The same thing would go for the US dollar. So be careful there. But in terms of timing, does it look good for September? Not yet. I need to be a little bit higher before we can do that. All right. Do I trade earnings the day of earnings? Michael, no, I do not. Are the HPMRs too skewed that day? Normally, when we have a very volatile event like earnings, what's going to happen is, rather than use the word skewed, what I'd rather say is we have a normal bit of volatility that reflects the past 6 months of price action, which means 2 of those days, just generally, 2 of those days are going to be the earnings day. And therefore, 2 out of 6 months, if we're looking at 2 full quarters, 2 out of 6 months will show earnings. That's just not enough to be able to say we want to. And by the way, you don't want a tool that's so wide in terms of its capacity to handle earnings, because that's such a separate and high volatility event. It's going to be too stretched out to handle the day-to-day stuff, where we want to be at 68% probability. So no, I never do. And it has nothing to do with the HPMRs though. Intraday, you can sometimes get a day trade. Sure, because remember, the gaps that occur on earnings are going to be pre-market usually. You'll get this pre-market release. You'll get this gap right on the open. So the psychology is pre-market. The gap is on the open. And sometimes the HPMRs will be just fine. So intraday trading, day trading and earning stock is not something I like to do. But remember, you're asking, it's two ways of looking at it. Would I already be in the stock before earnings? To your point, Michael, no. So you have an interesting question. Could we day trade an earning stock? Normally, I won't. Mainly because the kind of volatility that it carries is outside the 68% probability. HPMRs, the way that we, our subscription to HPMRs, hourly price movement ranges, we want to have, the kind of zones that account for about 2/3 of what we typically see. And of course, that leaves 1/3 for crazy stuff to just leave alone, right? When things are not operating in those quote unquote normal ways, right? Normal trading is great. Abnormal trading, not so much. It presents too much potential risk. All right. Great question, though. Can we day trade those names? And I typically won't. Next up, David. Hey there, David. Love the Sector Secrets Mastery course. Exceeded it. Well, my pleasure. That is always the goal. Thank you. I appreciate that. Very kind of you. Looking forward to taking my next Forex Freedom. Oh, taking Forex Freedom next. Any good Forex book recommendations? If you're taking Forex Freedom, you've got my most recent take on Forex. David, I don't trade Forex as much anymore, especially not here at Simpler, because we just don't have as much interest in Forex trading currencies, but we do futures trading currencies. And, really it's 6 of one, half dozen the other. If you've got a read on Euro US, it's not going to be a different read than what you see on the mini or micro or the futures currencies. So as far as books go, I wrote 3 of them, but I'll tell you what, if you're going to take that class, you're covered. All right. You're absolutely covered. Steven says, working on a Sunday, every Sunday evening, getting ready for Monday. A lot of traders, they start getting ready for the day at 9 or 9:30 on Monday. Sunday evening is separation season. This is where traders are getting ready for tomorrow. And for me, this is the way I've always done it. It was what one of my mentors told me to do. Hey, Rog, everyone else is going to sort of get over to the computer at 9:30, and you're already going to be ready to go. And that has proven to be true. So absolutely. Do I offer any stock recommendations? No. If you have a question, I'm happy to answer it. But our show here is designed to be an interactive show where I can walk through your questions, walk through what's going on macroeconomically. Of course, the central banks are in play. If you have a question, feel free to type it in. I save all my setups for, frankly, folks in my mastery. But if you have a question, feel free to ask. Happy to cover it. All right, next up is, how is the current situation when Soros broke? How is the current then when? Stacy, I don't quite understand the question. How is the current situation then when Soros? I don't follow the question, Stacy, but please elaborate and I'll be happy to take a look at it. I've taken a bunch of your courses, including the recent day trading one. I appreciate that. Do I use the daily price movement range in addition to the hourly? Not often. No, not often. I'm aware of them. I am aware of them. They probably end up more useful to me on my swing trades. All right. So that's how I use them usually. How do I adjust daily and hourly price movement again, I don't trade. I don't worry about adjusting anything in terms of earnings because I don't trade earnings. However, and you ask a really interesting question. During earnings season, during the heart of earnings season, when the most heavy-weighted stocks and the sectors and the indices are undergoing all that tumultuous volatility, yes, there's a far higher likelihood that we're going to end up running some of the packs a little bit more often. Lorna and I, the Lorna bot and I check the volatility. So, for example, Apple, Microsoft, Tesla, Netflix, kind of, but Apple, Microsoft, Tesla, Meta, Google, when those major weighted stocks have their earnings, yes, it's going to have reverberations through sectors and through the indices. And if we have enough shift, in the volatility, we'll run new HPMRs. Yeah, so we're always watching that, earnings season or not. Yes, we're always watching that. But you ask a great question. And DPMRs, mostly swing trading. All right, Kathy, I appreciate the kind words. I love putting out content on ETFs, ETF sectors. That's my thing. That's my thing here at Simpler. And the reason we focus on sectors so much is that the composition of the indices is made up of stocks, yes, but then they're bundled in another layer, and that's the sectors. So if I look at NASDAQ, it's easy to say, oh, NASDAQ is Apple and Microsoft. Sort of. It's really XLK, XLC, and XLY. It's really tech, consumer discretionary communications, and looking at the stocks within those sectors. And then the sectors oftentimes offer us a way to take advantage of a group of very similarly trading stocks, but with better bang for our buck, because the options on those ETFs are oftentimes far less expensive than even the indices sometimes and the stocks within them. For example, I did not like the structure of the S&P, but I really like the structure of the XLF. And XLF is a high concentration weighted sector within the S&P. I don't love the cost for a lot of our traders, nor do I love the structure of the NQ, but I loved XLC, less expensive, better outperformance. So yeah, I love talking about that stuff, Kathy, and I do appreciate that. Hey there, how are you? Excited about that? Oh yeah, that reminds me. So for those of you that are in the Sector Secrets Mastery, tomorrow, 9:20, I will see you all in the room. I'll be on the mic, and we're going to take a look at some short-term time frame setups. Now, my swing traders and my longer-term traders in the mastery, remember Tuesday at 3 p.m., we've got our longer-term portfolio conversation we're going to have from 3 to 4 p.m. And then on Wednesday, from 10:45 to 11:45, we're going to scan the broader markets on the daily time frame and look for those swing trading setups. So we definitely have we have some specific sessions to day trading. We have specific sessions to our longer term portfolio. We have specific sessions to our day trading Monday through Friday, and the daily swing overnight trades that we'll be doing on Wednesday. And another new session we've got tomorrow on top of my day trading, 9:20 to 10:30 tomorrow, is the Lorna bot. We have the first tech session with the Lorna bot. Lorna does all my indicators, and she's going to have a tech session from noon to 1 tomorrow in the Sector Secrets room. So that Sector Secrets room, we're buzzing. We got a lot going on across multiple time frames. And so if that's something that you really want your trading to evolve to or fine tune to, short term, daily, and longer term, and we've got it all going on now, starting this week. Very excited about the new schedule. Can I check Cisco to the downside? Sure. Earnings are still far enough out, Glenn. Thanks for the question. Earnings are still far enough out where this is an opportunity to continue to short the rip on this downtrend. Are we kind of stuck? The problem is you've got this downtrend meeting this horizontal support level. Take a look at the double Darvis here. So the risk is the width of the wave for the most part. However, the reward is shrinking. That reward zone is shrinking because what we have is the resistance is getting closer and closer and closer to the support of the Darvis. And that is a problem. That's going to lead us to having a smaller and smaller and smaller initial first target. However, it's still viable for trading. But again, I want to be flat into earnings, and I will not execute new trades in Cisco 2 weeks in front of earnings. And again, if you want to know more about the 642 earnings window, all the details are over at countdowntrader.com. Trish has written up some fantastic explainers on the way that I like to view earnings. I think we have 2 or 3 updates over there at that blog. So the easiest way to find it, by the way, is go to Google, search 642 earnings window countdown trader, and 2 or 3 of the results should lead you to, I think, 2 or 3 of the updates that we have over there. So I like it, but again, the problem is that dynamic resistance of the wave in a beautiful downtrend that's been intact since the middle of April. That beautiful downtrend's coming up on a pair of Darvis levels that are holding pretty steady around $40, $41. All right, next up is, let's see. Once you learn the mechanics and nuances of the market, can I speak to how long? Can't even address that, Mr. Well, I know it's people ask me that all the time. My friend, I'll tell you, let me give you an example. First of all, it's always important to get the mechanics of order entry, the mechanics of your indicators, the mechanics of the market down. You're right. Let's say you started in 2020. People say, oh my gosh, this trading thing is easy. The market dictates how that's going to happen. A lot of traders in 2020 thought, this is what I'm going to do. Look how easy it is. We just buy. 2021 still was pretty generous. 2022, those folks have gone back to doing whatever they were doing before trading. It's not that they didn't know what they were doing. It's that the market was really, really kind. So there's no way to answer that. There's just no way to answer that. And it's going to be different based on the trader. It's going to be different based on the account size. It's going to be different based mostly on the behavior of the market. In the mid-90s to about 2001, everybody was a day trader. You might remember that tech boom. Everybody was a day trader. And even in South Florida, all these day trading floors were popping up. These companies would open up dual screen monitors, let people come in and trade from the office. Do y'all see those around anymore? Of course not, because the nature of the market changed. And so that's why it's just not a question that's even realistic to answer, right? It really does depend on the market behavior. And then remember, if it's a really easy market like 2020 was, I mean, really, anything that's geared towards, I even look at the content that I created in 2020. Gang, it was a trend. You know, I talked a lot about that back then too. It's a really strong uptrend, relentless uptrend. And when you have those, gang, everybody can trade. It's just not that hard. Now, this is where you find out, do I understand position sizing? Do I understand risk management? Do I understand discerning between chop and trends, uptrends and downtrends? Do I understand macroeconomic cycles and what they do to certain corners of the market? And it's pretty brutal in terms of a trader who cut their teeth into 2020 and now, frankly, has to learn how to trade. And if you can get through this year, if you can get through a year like 2022, when things get easy again, oh my gosh, you'll be, it's fantastic. And you'll start to see why, it's really going to depend on what the market gives you. So I hope that makes sense. Okay. All right. Next up is nice bounce back on XLF. Can we behave the same when we report tomorrow? Sri, that means I'm looking into the future. I have no idea. And guess what? Nobody else does either. We react to price. We do not predict. That's a question of prediction. I'm sure some people will answer that. Nobody knows, my friend. I appreciate the question. It's an overall downtrend. So what we do is we think about scenarios. If the market, right? It's always if, not is the market going to do this. If versus is. If the market moves higher, XLF or a downtrending bank stock, I'll probably look for another short opportunity. If the market moves lower, well, I've already got an open set of puts, and that's just going to move in the direction that I already have a position in. So I think if we can replace the, and I can appreciate the question, my friend, I totally get it. But if we can replace, is the market going to do this, to if the market does that, what will we do? You're gonna actually be trading. You're gonna get away from predicting, which is just bad news, and you're gonna get into trading. So I completely appreciate the question. I would say XLF will be the better way to go. MS looks interesting. Goldman, clearly, these are both markets that are choppy. So it's really more about an overbought short, unlike the XLF, which is still in a downtrend. So what I want everyone to remember is, yeah, I'm going to be looking for another entry here for sure, as we get more of the financials. So if you're flat on the XLF trade, which was a nice winner for us, if you're flat on the break even stop now, remember, I'm going to be looking for re-entries here. And the nice thing about playing the XLF versus an individual bank stop is we get to, rather than playing one stock, which is a very binary right or wrong, we sort of get to dilute everything and take advantage of a general direction in that market. So thank you for the question. All right, last question before we wrap it up. Is your day trading in Sector Secrets? Am I going to be on the mic? Yes, I'm going to be on the mic. There's 2 days a month that I will not trade on Fridays and Fridays alone. Non-farm payroll, we will not have that 9:20 to 10:30 session, and options expiration Friday. Other than that, Monday through Friday, 9:20 to 10:30, 10:35 in that Sector Secrets room. I will still be in the futures room, gang. Absolutely. I will still be doing what I do in the futures room, whether that be day trading, whether that be our overnight trading in the indices or in the commodities and the currencies. So yes, remember, when I'm day trading in the Sector Secrets Mastery, we're really looking at options. Most of what we do there is option. Now, some traders in that room, they trade the underlying futures, but that's an options trading room. While some traders will trade the futures, which is perfectly fine, we will also set up stocks. We will set up options on the ETF. So it's a little bit different in terms of the focus of the asset class. All right, gang. As always, thank you for joining me for our weekly look at the market, kicking off Sunday. I really appreciate y'all. I appreciate the questions, appreciate your time. You all taking time out of a Sunday when most folks are still in weekend mode and you're preparing for the week. Separation season, gang. This is where we prepare for the week. Not Monday after the coffee kicks in at 9:25 a.m., right? Okay. Be good to each other. Thank you as always. And I will see you all tomorrow morning, 9:20 a.m., 9 o'clock, 9 to 9:20 for charts and coffee. And then we'll be rolling into our Sector Secrets session. Really excited to kick off the new schedule. All right, gang, be good to each other. And if you haven't checked out what we do in that room, you can head on over to sectorsecrets.com. It forwards over to the explainer of what we do on over there at the Simpler Trading site. Just easier to remember that URL, sectorsecrets.com. All right, gang, be good to each other.